Hello, YouTube. Today we're going to be talking about how we are currently at a crossroads to either go up or go down. And the reason why this is so important is because tomorrow we have CPI coming in hot. And then after that, we have got the Fed decision, the ECB decision, and a whole bunch more economic data. So we're going to focus today's video on purely talking about the technicals, but we also want to take a step back to understand something that is very, very important. And that is the reason why we actually show up to trade, because right now, that is going to be a very important question. Would you rather be right in predicting the move here, or would you rather react to the price action? Meaning, if we move higher, are you going to believe it? If we move lower, are you going to believe it? And that is what's really important. So, what we said, what the title says is do this now. That is exactly what we're going to focus on in about 30 to 60 seconds. But please bear with me. I would really appreciate if you could smash that thumbs up. I know it seems like a small gesture, but it really goes a long way to support our channel and tells YouTube more people should know about us. All right, so I'm going to start off with just talking about where we currently are technically, and then we'll talk about the do this now. So let's have a look here on the chart. I think a lot of people might be surprised we're actually moving higher today. If you remember, on the weekend, I laid out a bull and a bear narrative. However, I still do not have confidence which way we're going to go. And the reason why is because, again, that why. I show up to make money. I don't show up to be right. So the bulls and the bears are largely attaching their ego to whether or not they are correct in calling the price moving higher or lower. What I would rather do is wait for the fallout and then trade it. And as we look here, we got CPI coming in tomorrow morning pre-market. And when we look at the numbers here, well, what's the market going to focus on? Is it going to focus on core CPI being flat? This is probably the most important number for tomorrow because core is what the Fed tracks. And then we got CPI coming in at 7.3 from 7.7 and CPI coming down to 0.3. So there's a few things I want to talk about today, but people seem to enjoy this. So I'm going to talk about the psychology here. Do you show up to be right, or do you show up to make money? If you show up to be right in the stock market, you want to make a call going into Powell, either up or down, and you're going to be fully positioned up right to the tits. You're going to be all in one way or the other, your ego, your account, and everything that goes with it. Or you can wait until we find the move, whether that is the bullish pattern I pointed out here on the monthly, where we bounce off 390 and we put in at least 3 green months. It can lead to a fizzle, which would be a soft landing and a little bit higher, or we could be pleasantly surprised and it leads into a big boom. I don't think we're going to get this one. I don't even know if we're going to get 2018. But when everyone's looking one way, I have to try to be objective to understand what could cause us to go higher. For me, it's dead simple. We have to be green in the month, which means we have to be above 410, above 408, and we cannot pierce below 390, period, full stop. On the bearish scenario, it's very simple too. We have an impenetrable fortress, which means we have been unwilling to crack this current primary downtrend, which goes back to our all-time highs. And if you can't draw trend lines, don't worry. You don't have to be Picasso. All you got to do right now is look at the 50 MA. It almost perfectly aligns with this area here. And as we pointed out many times before, we look at back in history. Okay, well, what happens when we are stuck between the averages? Well, it's choppy, but when we're above both, man, there's a nice expansion. Above both, there's a nice expansion. We look back to 2016, over both, there's a nice expansion. And then going back to the period, which I think we're more similar to, 2000 or 2008, take your pick. When we're stuck in between, man, it's like choppy, down, up, down, up, down, up, down. And then when we finally lose both the 50 and the 200, the trend's a lot more clear. Dead cat bounce, down, dead cat bounce, down, chop it up. Choppy, get back above both. There's a nice expansion. Look to 2008, almost the same thing. We're stuck between the averages. Yeah, it's choppy. Right, up, down, down, up, down, dead cat bounce. And then when we finally lose both, right over here, that is where it's pretty much a very simple story of us only going lower. So where are we right now? Well, we're stuck. We're stuck between the averages. So let's delete everything again and just try to think about this as technicians, right? Technicians mean we look at technical analysis. And the technical analysis means looking at the price, looking at the volume, looking at the pattern. Well, 50, 200, 250, 50, 200, 250, until we're able to get above by a few more points. I can't say that this is bullish until we actually confirm by getting below here. I actually can't say we're ready for more weakness either. So until then, I'm ready to let the market dictate where we're going to go. I also want you to be aware of two patterns here on the weekly. Why? If we look at a short time frame, it's going to be more obvious. But here, for illustrative purposes, we're just going to look at the weekly chart. So if we look in really nice and close here, what do we have? Well, there's a bullish and a bearish pattern. There's both again. So we look here. All right. What are we looking at? We're looking at a micro inverse head and shoulders, where right now the low from 3 weeks ago, 393.3, that area we were lasered in on Friday, 393.3. Then last week's low, 39164. What's our low so far this week? 393.41. Whoa. So if that area holds, that's a shoulder, that's a head, that's a shoulder. That's bullish. If it holds, if. Yes, everyone seems to want to tell me why I'm right or why I'm wrong. Again, they're focused on the I want to be right. I'm over here saying I don't particularly care. I just want to make money. And then for the bearish scenario, what do we have here? Well, we got a left shoulder, we got our head, and then our left shoulder. So if we get above 39935 and confirm by getting above 403, is that significant? Yes, it starts to invalidate the head and shoulders, but otherwise we got it here. Is there more evidence for this pattern? Well, look at the highs here. We talked about this. 400.00, 404.93, basically 405. What do we got here? Wouldn't it be like 400? Yes. And that would basically be our head and shoulders. That would be a double top here at 400, and then we shouldn't go higher. It would also confirm that our 2008 pattern, we were looking for a higher high. We got to get all the way up to here. But again, we have to get back above 405. Also, on the daily chart, what do we have here? The 200 DMA, 402.67. That's correct. So if we're going to print a weekly higher high, we have to be above the 200 MA this week, or we have to wait until next week to get that higher high. And I don't know which one's going to play out. So right now, I think you need to figure out whether you want to be right, meaning position before Powell, or if you want to make money, meaning let them fight it out. Let them get it above the 50, and that is where the rally will be more frictionless. The bull pattern will prevail. We'll be green on the month. We're over the 50 moving average on the month, on the weekly, over the 200 daily, and we're ready to go higher. And does it matter the reason why we're going up? No. If lines are pointing up, you make money being bullish. If lines are pointing down, you make money being bearish. So in the kangaroo, which is where we are right now, bears get sufficient evidence that they're right, like on the declines, and bulls get sufficient evidence that they're right too, which means both sides are like really, really confident, even cocky. So what's the saying? Well, perma bulls and perma bears are pigs and they get slaughtered. Do not be perma anything. Do not be permanently bullish or permanently bearish. Now let's go through and see what we had for news today. Why? This is the Super Bowl. After this, starting on roughly December 20, volume's going to dry up, and whatever is established between now and end of the week, I believe is going to be the fallout for the rest of the year. Right now, we're back into greed too. We're at 59 here. That's pretty nice, right? Back up to greed here. Cool. In terms of the numbers for tomorrow, I don't know how this is going to be interpreted. I honestly have no idea. However, if we're told that we want to see deflation into 2023, is flatlining good enough? I don't know, right? And again, I'm just trying to put my critical thinking cap on here. Is it good enough? Well, let me make sure I can count correctly here. We got November, then December, then we're into 2023. And going back to even 2018, the periods we're talking about, there's only been 3 months where we actually had a contraction in inflation. And that was where? Right in the height of the lockdowns. So it's nice that we're coming back down closer to zero, but we're not going to get deflation until we actually see negative numbers. So November's getting pretty close to December in the new year. That's right. And if we look back here at our economic calendar or investing.com, we note that inflation is still here at over 7%. So right now, when we're talking about the Fed having to go to 5%, well, if we don't see deflation, CPI being at 7 is still a problem. It's not technically restrictive, which means this either has to come down, CPI has to come down, or rates have to go higher. However, let's try to take the other side of the coin now. That's what the bears are going to be looking for tomorrow. What's the trend? Now let's look at this. New York Fed, year ahead expected inflation marks record month to month decline in November. Wow. Record expectations, not reality, expectations. New York Fed November year ahead expectations fall to 5.2 from October's 5.9. Is that enough? Is that enough for the Fed? Well, it's a record, right? Largest decline on record. When's the records go back to? I don't know. All right, let's look at one more thing here too. Let's look at. I actually had a big sneaking suspicion that Binance might be in trouble. That's the exchange that I use. I'm Canadian. It's really hard to get money on and off exchanges. This is the one I used. And with Sam Bankman-Fried talking today, there's a lot of alarm bells going off. This one's really notable to me. Binance's proof of reserves raised red flags, right? Raises red flags, according to a report. I don't want to get into all the specifics here. They got twice as much in their Binance US dollar than FTT did, which means the problem for Binance might be 2 times as big. And that could be bullish or bearish. Why? Well, let's have a look here. Let's have a look at BTC USD. It's green on the week, right? People don't care. They're saturated, right? They're so fatigued of the bearish news. And ever since we had the big drop on FTT, well, we're starting to retrace here. And what do we have? We have a lot of lower wicks, right? Lower wicks being bought up. So if the riskiest asset, Bitcoin, is down a lot and there's still a deluge of negative news, well, why can't they take it down? Is it that there's a delayed effect? Is it that this has been so well telegraphed that people discount the future, which is what the stock market is? Who's expecting good news? No one. But who discounted the bad news? Everyone. Is that kind of what we're looking at for the broader market? Where for, I don't know, like we've got, ever since the bottom, we got, this is what I was looking at too. If you guys remember, our 3 volume spikes in capitulation. Let me see if I actually have the chart here. Might actually have it up handy here. Yeah, here we go. No, not this one. Give me 1 second here. Let me see if I can actually pull it up. Because this is what let me just go to 2 boards here so I can actually get this stuff sorted out. Let me go to Bitcoin, and here we go. So again, I'm not saying that this is gonna materialize. I'm trying to understand what the market's telling me. Why? Well, because my confidence level is not as high this week. I think I know what should happen, but the saying is the market can remain irrational longer than you can remain solvent. So going back to 2020, or the last time we lost this primary uptrend, we have 3 big flushes of volume. 1, 2, 3. That's this capitulation right here. No one left to sell. What are we over here? Well, 1, 2, 3. We violated the green line. And since then, we've been trying to eke out green every week. We got 2 marginal red ones with dojis, but otherwise it's green. Is this good enough? Well, I don't know. I'm seeing some evidence, right? It's like if you're a lawyer, you're defending your client, you think he's innocent until he shows you that he's not. So right now, as I look at the riskiest assets, it's hard for me to say we're one way or the other. We can look at this with a bullish or bearish tilt, depending on how we're positioned, if we want to be right. If we're looking to make money, the trend is very clear. If the QQQs fall below the 200 weekly, it's lights out. We're below both averages. The bulls lost. The bears are victorious. And with the largest weighting still being tech, we need to see new leadership emerge. So if we look through our ETFs really fast here, let's just have a look at these really fast. We did this on the weekend too. Why? Well, because even just one day changes things. The Dow. Look, we back tested our downtrend, bounced off of it. 1, 2, 3, 4, 5, 6 candles over the 50 EMA. That seems like it's building up steam. It's only 30 stocks, but it looks good to me. IWM, well, it got back over its 200 weekly. That's progress. Is it enough? I don't know. This could turn into a shooting star where by the end of the week, we're a lot lower. It could also be up here at the 50. I don't know. I have no idea. Why? I'm not focused on being right. I'm focused on trying to make money. It sounds silly, sounds simple, but a lot of people don't think this way. All right, RSP. It's flirting with the 50. It actually closed over it today, right? Cool, right? 145.89. We closed at 146. Nice. RSP. NYA. Oh, it did it. Closed by 4 points over it. We made it. The New York Stock Exchange, or 2,000 stocks, is short-term bullish and long-term bullish. It's over both averages. It's in a bull market. All right, XLK, right? This is the same thing as tech. It's just the Spider-Man and ETF, really similar. Looking here at ARK, we're just going to skip it. XLV, rocking that uptrend, way over the 50. 1, 2, 3, 4, 5, 6 back-to-back weekly closes over as well. 7 out of 8. Looks pretty strong. And I would note here, the ones that have been able to get fresh momentum excuse me, they had to close over the 50 and then they got the power up. Look at the Dow too. So looking at the Dow here, after it punched through the 50, it flagged out. Now it's trying to rally. The S&P is not there yet. It almost kissed the 50, but if we can't get to 410, how are we going to get that oversized move higher? I do not know. It seems impossible to me. We can't go higher if we can't build momentum. Looking here at XLF, pretty close to the 50, right? That could drag the S&P higher. XLE trying to reverse. XLU over. Man, like a lot of charts are looking pretty bull here, Justin. Yes, again, and when bad news can't take it down like we would expect, just like on Friday when we got that PPI print, right? Oh, sorry, was it on Friday or Thursday? I forget. PPI came in 100% too high. That didn't affect it. We went higher anyway. That's right. We did go higher. So I would really appreciate if you could do me a big favor and smash that thumbs up. It's going to go a really long way to tell me that you guys enjoy this content that I put out every single day to try to help you. But at the end of the day, these videos are also for me. It's my way of trying to tell myself what I am looking for going into here. Well, the reason why I keep talking about do I want to be right, or do I want to make money is because I'm trying to remind myself why I trade or invest. Trust me, there is the temptation all the time to be right. And you guys have been really liking the quotes I've been saying lately. Those are called Justinisms, where over the course of a number of years, probably 4 or 5 years now, I have figured out what works for me. And when I have those easy sayings like chips lead tech, tech lead spy, or it's okay to be wrong, not okay to stay wrong, right? If in doubt, zoom out. Different sayings like that have really helped to simplify things for me. Keeping things simple is how I have my unfair advantage. The more complicated the story is, or the more indicators I have to look at to confirm what I think, man, I just get confused. Are we above the short-term and long-term price, the 50 and the 200 MA, on a time frame that I find to be relevant? Right now, that's mostly the weekly chart. That is it. That's all I look for. And second thing, are we going to fight Jerome? So when we say, are we fighting the Fed? We have another Nikki Leaks report here today, right? This one's coming in fresh, December 12th. How long should Powell keep raising interest rates? Fed officials are divided. So if we're not fighting the Fed, well, the Fed doesn't know what they want, which is why I think we're stuck between these averages. They don't know what the hell they want. They don't know if they want the bear or us to go below the 200 or the bull for us to go above the 50, which means whether the doves are going to take control and we get over the 50 and we stop hiking and start cutting, or if the bears are like, let's err on the side of safety. Let's sacrifice the economy and jobs for us to tame inflation. Dual mandate. I don't know. The Fed doesn't even know. So if we're in the kangaroo, the Fed is divided. Let's go down to what Jerome is talking about here. This is the fastest hiking cycle in the last, 20, 30 years too. Our current cycle is faster and higher than the 90s, than the 2000s, than 2015, than 2000. This is like a big deal. It's like a really big deal. Inflation's also a lot higher than it was before. We're up here at 7 and 6, when every previous one was between 1 and 3. Yes, that is right. We're like facing a huge uphill battle. So we're going to skip all this stuff. Encourage you to just Google it if you want to go read it. Let's jump down to what Jerome says. Why? Because Sugar Daddy Papa Powell is the guy. He's the big guy. He's the big boss man. For now, Mr. Powell signals his intention to follow through on the rate increases that investors anticipate, which will lift the Fed's rate to around 5% by March. He also seeks to forge a consensus. Blah, 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 blah. He's already under fire from Democrats, right? Pew, 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 right? You're going to break something. Elizabeth Warren says, who cares? Some investors think Mr. Powell will flinch. Okay, cool. People really judge the fact that Jay is a diplomat and genuinely good guy. That means he's a conciliator, which is absolutely not the case, Mr. Coral said. Blah, 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 blah. During his panel this spring, where's this one from Jerome here? Hold on, let me see if I can find the quote. Here we go. Mr. Powell said in a news conference last month he would prefer to go slower and feel your way a little bit to what we think the right level should be, and then to hold on longer at a higher level and not loosen policy early. We talked about this ad nauseum on the weekend. So what I'm not going to do is to go over all of that again. What I'm going to do instead is actually provide you with a timeline here. If the Fed is confused, I believe, not I know, I believe. If we look here to 2023, they're talking about March. I would also note the March meetings have an asterisk here. The asterisk tells us that this is a meeting associated with the summary of economic projections, which means If they're going to pause, if they're going to pivot, and if they're going to do it right now in December, guess what we get? We get an asterisk. He wants to start to lower. He's going to have to tell us the reason why with a summary of economic projections. Remember, he has a mandate. His mandate means he has to tell us the reasons why. We have to understand what he's saying. So if they're going to do a pause, meaning the actual pause, I believe it's going to happen either in March or it's going to happen in June. And the question is whether he's going to do more hikes faster, like more 50s, right? A couple more 50s, a 50 in January, 50 in March, and then he can pause. Or if he wants to downshift to 25s, right? 25, 25, 25. And then in June, he can choose to slow it down. That's what I think. But again, I'm not Jerome. I have no idea what this man's going to do. And if you've watched all the way till the end of the video, I want to leave you with a glimmer of hope, because the reasons why I invest and the reasons why I have been trying to do these videos and the reasons why I want to find more people who are like us is because it's incredibly hard to find people who are willing to put an opinion out there and be wrong, admit they're wrong, and then try to learn from it. Everyone's so focused on trying to look like the keyboard warrior, know-it-all, late post, look what I did, look how smart I am. I don't care about any of that. I've been humbled enough times that I know what I know, and I know what I do not know. So this sounds really interesting to you. We have a special thing we can offer to you right now. You can go to thealgo.com. It'll be in the top comment. It'll be in the description. And you can join us for a 14-day free trial. We have not had trials open for more than a year, which means that we're finally ready to show you what we got. The sale is on for the next 18 days or until December 30th. And you can come join me, Justin from YouTube. You can join a private stream tomorrow after we get that CPI print. And we're going to be streaming through live for the Jerome Powell meeting for our members in our The Algo channel only on Wednesday, which means you can join us for the 14-day free trial. Come see how I'm planning to action this trade going into CPI tomorrow. And we'll trade live together on Wednesday when Jerome Powell is giving his press conference. If that sounds interesting to you, come join us at thealgo.com to trade with Justin. And if not, I thank you so much for watching, and I look forward to seeing you tomorrow. Thank you very much.